Well, hello everybody, and I trust you are well. Happy New Year to you all, and all the best for 2023. So, Happy New Year again, all the best for 2023. Welcome to the new version of Live Trading Profits. It is short, it is punchy, it is precise, it's designed to be the best in terms of price action education for all of the guys at Actions to Wealth who are joining us. Pop in any questions that you have. It is only 15 minutes. This show is only going to be 15 minutes, and we are going to be focusing on the best price action setups in a week cycle. So let's get started since we don't have a lot of time. Hello to everyone. Thank you for just posting your notes there. I appreciate it. So this is S&P 500. I mean, I really think a lot of classic things took place here. And you will probably pick up a few things that if you trade in price action will start to make sense to you. Looking at the US Open, by the way, if you are subscribed to the year-long coaching, the afternoon session is coming up, the US Open. We will trade live together for just 2.5 hours. US Open took place right here. Bear candle, first candle, which was also a bear outside candle, creating confusion in the market. Which way is the market going to go? Absolutely fantastic for the strategies that we trade. Then you just have to wait. If you trade this market for a breakout, remember, whenever you see a doji, sideways price action, indecision in the marketplace, it is best for us to wait for a breakout. Second candle, attempt by the bears to break out beneath the doji. And of course, the big attraction, the big magnet for the bears would have been the high of yesterday, high of the previous day, which is this green candle. Perfect test of it, failed breakout by that candle. Then, of course, you got to be waiting. Now you got to be asking yourself questions. The price action since the UK Open was just straddling the high of yesterday. No one actually taking control of the market until we got to the actual Open. Then, when you get the second candle, it's a failed breakout of the first candle. Not a surprise whenever you get a doji, a trading range, you always expect there to be a failed breakout. Most breakouts fail. So with the breakout, now if you're thinking of the strategies that we trade, you'll be saying, hang on a second, we don't get a first candle trade, we don't get a second candle trade, bear candle. Maybe we get a breakout pullback that we're going to trade. So we had the breakout, the pullback, the high one, and third candle trade you would have taken. But the key thing is, where would I put my stop? It always comes down to where you put your stop. Now, take a few moments to talk about the trader's equation. On one side of how we trade is our strategies, our patterns, things that we know out of a basket of trades, out of 100 trades, the probabilities will turn out in our favor, okay? Then on the other side is risk management. The trader's equation has three components to it: risk times reward times probability. If you got everything balanced, it will wash out itself by the end of the month and you will make money, end of the quarter, whatever the case may be. But if you trade in the full month, you should be able to make money from your strategies. You've got enough days to execute all your strategies to create this basket of trades, so that the equation works out for you. Risk, the first trade, we always looking to take, well, not we always are. I recommend for everyone that comes to the price action coaching sessions that your first trade is at 0.25% of your capital. Why do I say that? Absolutely important. When I trade, I have this pot of funds that I have. When I come to the market every day, I take out 3% of that. I am willing to trade and lose that 3%. There's absolutely no problem if I lose all of that, because as long as I'm executing my strategies, then I'm fine with it. Why am I fine if I lose the 3%? Well, I'm fine because I understand the trader's equation, risk, reward, probability. I control my risk So I go in at 0.25% first trade, and I'm able to take multiple trades like that. But I have a cap to what I'm trading, which is 3% of my overall capital. So I'm managing my risk as I go along. Reward, if the market goes in my favor, when I'm taking reversal trades, which have a higher probability of being stopped out, when the reward is much higher, 2 times, 3 times, 4 times. If you're taking trend trades, higher probability of success, but you're only going for 0.5 to 1 or 1 to 1. So reward, we know where our reward is going to be. The key thing that traders struggle with is probability, because probability is unknown. Everything can be set up based on our strategy. The moment I execute, I have absolutely no clue whether out of my baskets of 100 to 150 trades for the month, I'm going to have a string of winners coming up and losses at the end, towards the end of the month, or I'm going to start with a string of losses, or it's win-loss, win-win, lose-lose, etc. We don't know probability of distribution. There is no one who knows that. It's an impossibility. You don't know what's going to happen. You are relying on your reversal strategy working in your favor. Out of a basket of 100, 150 trades, 40% will win and I'll make huge rewards. 60% I will lose. I must manage that. Trend trades out of a basket of 100, 150 trades, 60% will win and 40% will lose. So we have to keep that in mind as traders. If we do not grasp the trader's equation, we're going to struggle. If we panic because we have a string of losses, we have a problem. If we celebrate because we have a string of wins, we have a problem, because the day you have a loss, it's like, oh my goodness, why is that happening? You have to work on your risk management and your strategy. So when you're trading at the open, we are trading a reversal strategy. There's many ways to try and get in. Chances are you get stopped at, but something will cut me for that. In this case, that would have been the entry. You could also take a follow-through trade, the breakout trade, but your stop has to be down here or here. You always need to use. If you're taking the first trade, you need a measured move stop. Look at that little trading range, measured move stop down here. If you're taking a little bit further on, you can tighten your stop 0.25%. Then you wait to see what other opportunities you get. We then had a pullback, interesting pullback in expanding triangle. Now, most pullbacks are easy to view. Say decent enough, 2 or 3 candle pullback, gets here, gives you a nice low test, everyone's happy. But sometimes we have these kind of pullbacks. It is still a pullback, it's an expanding triangle. Market is expanding outwards, breakout mode. That trade, if you wanted to take that trade, you could have, but I didn't put that in because it's a higher risk trade, and your stop, earlier stop is possibly here or a little bit further. So you want to wait a little bit above an expanding triangle flag. What do you want to wait for? You want to wait for a breakout, you want to wait for a pullback, and then you want to execute the trade. I put in here on PowerPoint, first leg pullback, second leg, leg 1. There is the full leg 1 from when the breakout started to its high there, and there is a pullback. The pullback started there. So this height is exactly the same as this height. So leg 1, pullback, leg 2. You can see the market got the reversal came at the leg 2 extension. What does that mean? It means the bulls that created this breakout achieved their objective of getting to a measured move. Okay. Another measured move breakout, final flag. What is a final flag? A flag is simply a pullback. A final flag is the potential last pullbacks. When you look at it, you say, okay, that was actually the last pullback for the day, because now for the move, because now we have a wedge top that has been created. Wedge 1, 2, 3 at a key level. Now, there's something about this that really makes it fascinating. When we got here, we got a wedge reversal, 1, 2, 3. There's a few things that we talk about when I do the course, and we talk about it a little bit more. After the second push, we have a close beneath the moving average. We then have a third push. There is a wedge, acceleration down, breakout, pullback, low 1. You could take that trade, breakout, pullback, low 1, or take that trade, or take that trade. Just depend how you risk size it. We have another breakout here, pullback, you could take that trade. So On the up, couple of trades, reversal and huge sell off. Now, what is interesting about this, which is I really want to draw your attention to, this reversal took place at a key monthly resistance. We have a wedge top reversal. Okay, we have a 10 EMA breakout with the 10 EMA, and we use the 10 EMA as an indicator of strength. So strong breakout with the 10 EMA, attempt double top, and then the market accelerated down. But all of this is taking place and giving you confidence to take a trade because of this long-term level. So that's low of August 2022, this light blue line. It was a bear signal triggered in September 22 and a bear breakout point on the monthly chart. So the bears created a signal in August 2022, a near perfect signal. And then that signal was triggered in September. And that's the level where it was triggered. I'm not going to show you that, but and that will clarify why this is such a key level. But the factors taking place here is that at the key level of resistance, we have a leg one, leg two, leg one, leg two. That's an invisible level of resistance. Market likely to respond there. We also have a measured move of this trading range here. So don't worry if you don't know what final flag is. It is a pullback, it's a trading range. If you do the measured move, there is a measured move. The market reversed there. So 1, 2, 3 levels of resistance. And then the things that to look for a wedge reversal and ultimately sold off. So if you start selling, you don't have to take these two together because they're pretty close to each other. You take one of them, you can then add into your winning trade. Now, before we go, remember, if you just joined us, it is just 15 minutes, best price action. So you can always go back to the video and watch, and we will learn a few things. I'm going to do a quick stop share. And I am going to share my MT4 just to show you. Okay, so this level here is the level that I am talking about. That's the level where the market responded. Okay, this is a monthly chart. So that day we saw is somewhere in here. Look at this, as perfect as they come, bear reversal signal. Bear sell-off, pull back. Bulls tried to accelerate above that, failed, came back, perfect high test, perfect signal candle, closing near its low, and the next month, huge bear sell-off. So that's a breakout point. That's been defended all the way down. Bears accelerated down. Bulls tried to make it fail, but the market is creating lower highs. So this market is bearish. The S&P 500 is presently bearish because of this structure. The bears want the January to sell off, and if they succeed in defending this level, they will continue to sell. So your mindset, even if you see a bit of a bull trend, we have been looking for this short opportunity. So keep that in mind. There is the August month, perfect sell signal, bear breakout pullback, perfect sell signal, excellent trigger by the bears, and that's the level that's been defended. So just as we shut down, so that's the level. Now, you put these levels in on your charts, right? And you just leave them. You don't know when the market is going to get there. So if you're working and you're trading and you see this blue line, you say, hang on, what is it? If you hover over it, your notes should tell you there is at low of August. And you know there is a key level at the highest time frame, the monthly time frame. There is going to be strong bears defending that level. If the bulls are strong, they have to be super strong to accelerate up. So you then get that reversal and you kind of prepare to say, let me jump into it. So a few things put together, and thank you very much. Feedback to the office and just give us your thoughts on how you like the 15-minute punchy show, key insights into 1 or 2 charts. And we'll see you again next Wednesday. And for those that are attending the mentorship session on Saturday, the 4th of February, I'm taking you through the 1-day course, Trading the Open. Enjoy it. Take care, guys. We will see you next week. Bye-bye.